About 40% of my $170,000 investing portfolio is invested directly or indirectly into some of the best Canadian dividend stocks. The reasons why I decide to invest in these companies is not only the fact that they are distributing great dividend income, but also the fact that they've been able to perform quite well lately, where they've been able to outperform the performance of the American market over the past year. So today, I'll share with you what I believe to be 3 of the best Canadian dividend stocks that you need to keep an eye on for the rest of 2025. The first company on this list is the largest energy company in the entire country, which is Enbridge with the ticker ENB. My love for this company might not be unknown to you if you've watched some of my previous videos, because at the moment Enbridge represents close to 10% of my total assets, and so this makes it one of my largest single company positions in my entire investment portfolio. But what makes this company, in my personal eyes, quite valuable is the great and well-diversified portfolio of assets that they have. Indeed, Enbridge is currently North America's largest natural gas utility by volume, by being able to move about 30% of the crude oil that is produced in North America, and by being able to transport nearly 20% of the total natural gas that is consumed in the US. But what also makes Enbridge pretty interesting is that it is a true pioneer when it comes to investing in some of the best renewable energy projects all across the country and in other different countries. To be more precise, they currently have over 23 wind farms, 14 solar energy operations, and 1 geothermal project that all help them to meet the electricity needs of about 1.9 million homes all across the country. Only in their latest earnings report, we've seen that all of these products have helped Enbridge to generate about $4.6 billion of adjusted EBITDA, which represent an increase of about 7% year over year. While on their side, their distributed cash flow have been able to slightly increase as well. For a company like Enbridge, it is particularly important for them to be able to consistently increase their distributed cash flow, since they are also distributing a big portion of their earnings in the form of dividends to their shareholders. And at the moment, we can see that their dividend yield is around 5.5% that is distributed on a quarterly basis. One of the things that have helped them to notably be able to grow their total cash flow as well as their valuation, where we can see that the stock's value is up more than 20% since 1 year, is the fact that they are able to make great acquisitions every single year. It is one of the main reasons why I absolutely love this company, because they're able to buy new businesses and to integrate them pretty well into their business model to expand the scope of their operations. Lately, they've notably announced the construction of a 600 megawatt solar facility that will be constructed next year in San Antonio in Texas to power Meta's data centers operations. And at the end of last year, we've also seen that Enbridge has finished the acquisition of 3 US natural gas utilities from Dominion Energy, which has helped them to expand their gas distribution and storage into new markets. And so for all of these reasons, I believe that Enbridge is definitely a must that you should have on your watch list if you're interested into some of the best Canadian dividend stocks for the rest of 2025. Now for the second company on my list, we'll jump into one of the other big sectors in terms of the Canadian economy, which is into the financial sector. And to do so, we'll be taking a look at one of the largest Canadian banks, which is the Toronto Dominion Bank with the ticker TD. As being a member of the Big 5 Canadian banks, which include other banks such as BMO, BNS, CIBC, and RBC, TD has been by far the best performer lately, where we can see that it has been able to gain over 30% of value since the beginning of 2025. This great growth came after 2 years of salvation, where TD faced multiple legal problems as well as different acquisitions problems between 2022 and 2024. Indeed, after the cancellation of the acquisition of the First Horizon Bank in 2023, TD faced another important issue 1 year later with the anti-money laundering case that forced the company to distribute millions of dollars of penalties to the people that were concerned. Nevertheless, the main reasons that can explain the great growth that we've seen in their valuation lately has been their excellent earnings report that they've been reporting. In their latest one, TD has notably been able to outperform the analyst expectations by about 9.1% in terms of their total revenue up to $1.7 billion. And on their side, their earnings per share have been reported 90 cents higher than expected. What is pretty incredible about their latest quarterly results is notably their quarterly revenue growth that we've seen of over 66% year over year up to $23 billion, which was mainly driven up by their strong financial performance in their wealth management and insurance branch, as well as in their wholesale banking branch. To me, what also makes TD pretty interesting as an investor is the fact that it is the Canadian bank that has the most exposure into the US market. Even if their attempt to buy the First Horizon Bank failed, which would have helped them to become even more important into this market, TD is still ranking amongst the 10th largest banks that can be found in the US with over $366 billion under management, and this even if it's only present in the East Coast of the United States. When you combine this with an excellent annual dividend yield of about 4% that is paid on a quarterly basis, insane profit margin, as well as an extremely low price to earnings ratio of about 10 right now, it makes that even if this company has been on a great momentum lately, I personally believe that it still has a lot of room for potential growth over the next couple of months and years. Now, for the third and last pick on my list, we are going back into the financial market with the insurance company Manulife with the ticker MFC. As for the two other picks on my list, I am also massively invested into Manulife because I have a long-term vision with this business. At the moment, Manulife is currently Canada's largest insurance company by far and one of the largest insurance companies in the entire world with a market cap exceeding $70 billion. Even if insurance companies have been going under a lot of hate lately by the general population, it is important to understand that they remain pretty important to our economy, notably when it comes to the natural disaster that could occur and that could create different problems to individuals and businesses. From an investor point of view, Manulife has been by far one of the best Canadian blue chip companies over the past 5 years, returning over 100% of total return. However, what is pretty interesting about this company right now is that despite being by far the largest insurance companies, when we compare it to one of their biggest competitors such as Suncor or Industrial Alliance, we can see that despite notably Suncor gaining 3 times less value than Manulife, they currently have a price to earnings ratio higher than Manulife. The key to this great growth of Manulife came notably in the forms of their excellent earnings results over the past 2 and 3 years, as well as the great acquisitions that they are also making every single year. In fact, their latest acquisitions occurred about 2 weeks ago when they've announced the acquisition of Comvest Credit Partners, a private equity and credit investment firm, for a total estimate to about $937 million. And so these are the type of acquisitions that help them to fuel their growth, where we've seen that in their latest earnings report, they report a massive increase of 72% in their total net income up to $1.78 billion, and where their earnings per share on its side bumped by 88% up to 98 cents per share. So it is definitely a great strategic pick to have in my own portfolio, because it is important to also understand that Manulife has a certain control on their profitability and on the price of the products that they are selling. Because let's say that Manulife is covering a certain territory and that over the past year this territory has been facing more natural disaster than it used to face, well, it would mean that the insurance company, which is Manulife, will need to pay more than the usual to compensate the victims, meaning that the following year they'll simply increase the insurance premiums to cover those fees. It is why they are able to keep an excellent profit margin of about 20%, which makes it pretty interesting from an investor point of view. Plus, what is also pretty cool to receive in your own pocket is their dividend that they are distributing on a quarterly basis with a dividend yield of about 4%. And personally, let me tell you a secret, I reinvest all the dividend income that I receive from this company to buy back new shares every single quarter. So as you can see, these 3 great companies are some of the absolute best Canadian dividend stocks that you can have on your watch list right now for the rest of 2025. And there are also 3 companies that I personally have in my own portfolio. But talking about my own investing portfolio, if you're looking to find what are different companies and ETFs that I have in my 6-figure portfolio, well, you can check out the video that's gonna be right over here, and I will see you soon. Peace.